Today was round 2 of our volatility setups inside of major sectors. Just yesterday, we took a look at 2 examples inside of XLF and XLE. Today, we had many more SPY sector ETFs which appeared on our live scanner. We had the financial sector one more time, again breaching the conservative volatility box models, almost the same setup as yesterday, long entry. We also had XLI, we also had XLP, we also had XLE, and we also had XLC, which XLC even appeared on the overlap tab. If I search for XLC here, you can take a look to see the aggressive long. You also had XLB. So a lot of different SPY sector ETFs today, which breached our daily volatility box models. Let's take a look at the SPY sectors in today's video. We'll start first with XLF. This setup should look very familiar. It's very similar to the setup we talked about in yesterday's video. I'll switch to that same 5-minute time frame chart. We have price action breaching our aggressive models. We then have price action breaching our conservative models. The first sign we have of momentum reversing and switching happens right before that 8 a.m. mark. And you can see right after that note, we have the bearish try one time to bring momentum down lower, very quickly rejected by the bulls, with the bulls taking over. And now that 1-2 punch setup took us all the way into not just the aggressive volatility box for a short side entry, but also the conservative volatility box for a short side entry. This XLF setup is about as picture perfect as you can get. And for those of you that have seen the V-shaped reversal course, this setup should really be screaming to you with all of the Keltner channel wedges, the edge signal confirmation, along with the momentum cross. So XLF was another nice ETF setup, very similar to the one we had yesterday, but I think today's was even nicer than yesterday because we actually got the follow through. We contrast this with some of the other sectors. XLI, you notice something similar here. Sell off into the morning, all the makings of that perfect V-shaped reversal with the Keltner channel wedges. We had the edge signal, we had momentum cross, and really the rest is history inside of XLI. Also went to the other side's aggressive and conservative volatility box clouds. We even triggered that short side setup here into the close in which we hit that conservative target, but this was a very quick scalp. Next up, we have XLP. XLP here, same idea, sold off into our aggressive clouds here. Unlike XLF and XLI, we didn't fall to the conservative, and we didn't see the same degree of follow through. A little bit less volatility inside of consumer staples, but still volatility that you could capitalize on for at least a T1 and a nice winner into the close, just taking it off there. After this, we had XLB. XLB, same idea, sell off, this time with the same Keltner channel wedges, V-shaped reversal setup here. Have the edge signal, have the momentum cross, go all the way into the other side's aggressive volatility box models. And finally, we had XLC. XLC should now be the same story as all of these other ETFs. XLF today stood out because it breached its conservative volatility box models, and we had literally just talked about this setup yesterday, where we looked at that momentum cross. Yesterday, it happened after the lunchtime hour. Today, it happened before the lunchtime hour. I think that's the key difference between yesterday and today. This is as picture perfect of that V-shaped reversal setup as we can get. If you haven't seen the V-shaped reversal course, I'll leave a link to it in the description box below. It's completely free. It walks through the exact rules to take advantage of these Keltner channel wedges and to take advantage of this momentum cross along with this back and forth action between bulls and bears. Take care, everyone, and I'll see you in our next update.